Members, good afternoon. It's been a while since we had a face-to-face meeting together, and now we have a quorum, so I called this meeting to order. As we haven't had a meeting in the room for a long time, let me just very briefly go through the procedures with you, and to allow members to speak in a more orderly order, we will use the request to speak system, registering members who'd like to speak. So press the button if you wish to speak, and also please press the button meanwhile when you want to indicate your wish to speak. So if there are no further questions, we move on to the agenda. The first item is confirmation of minutes of meeting and matters arising. The last meeting was held on the 7th of February, and the minutes of the policy briefing-cum-meeting have been circulated to members by paper CB-1 227/2022, and the Secretariat has not received any proposed amendments. So if there are no further comments, may I invite members to confirm the minutes? All right, we all agree? Next item, information papers issued since the meeting on the 4th of April 2022. So just to inform members, since the last regular meeting on the 4th of April, the panel has received one information paper which is set out in the agenda for members' reference. All right, no question? You've all received the paper? All right. And then, date of the next meeting and items for discussion. The next regular meeting is scheduled for the 6th of June 2022 at 10:45 a.m. The administration has proposed to discuss the two following items in the June regular meeting. First, briefing by the Financial Secretary on Hong Kong's latest overall economic situation. And two, development of financial technologies or fintech in Hong Kong and measures in tackling financial fraud. So members, do we agree to the two items proposed for the June meeting? All right, all members agree. Moving on. We now invite the Hong Kong Monetary Authority to brief us on their work. And let me first invite the HKMA representatives to come in. We have with us today, representing the HKMA, Mr. Eddie Yu, Chief Executive, Mr. Arthur Yun, Deputy Chief Executive. I'm sorry, it's Arthur Yun. Well, I didn't pronounce his Chinese name correctly. Please enlarge the font for me next time. I'm sorry. And also Mr. Howard Lee. I'm sure I'm getting it right. And also Mr. Edmund Lau. Welcome to our meeting. So Eddie, please take the floor and brief us. Yes, I didn't catch it. The speaker's not coming through. Right, Eddie, over to you. So, as a standing practice, I'll start by updating members on the financial environment globally and locally, and then I will brief members on the work of the HKMA. In the past 2 months, as members know, there have been a lot of fluctuations in the global market. First, because of the Ukraine situation and the tension on the rise, and also high expectation of the U.S. Federal Reserve interest rate hike. And if you take a look at the chart on the left, that relates to the global market. And because of rising tension, you see this dotted line moving towards the right, and then there was a drop in the global markets with a slight rebound in late March, early April, because of rising expectation of the U.S. Interest rate hike. The equity markets then also increased, as I mentioned, with the risk aversion sentiment and the growing U.S. Fed hike expectation. The U.S. dollar liquidity is being tightened, as you can see in the blue line, and as for the red line, it represents a 3-month U.S. dollar LIBOR rate. So again, you will see an increasing trend with tightening U.S. dollar liquidity. Apart from the risk aversion sentiment in the global equity market, the Ukraine situation also causes or having an impact on the commodity prices and agricultural produce rises and energy prices. On the left-hand side of the chart, you will see, say for coal, the price had gone up by 90% since the beginning of the year. And commodity prices increase would cause inflation to go up. So if you take a look at the right-hand side, together with energy and commodity price hikes, the inflation is going up further. Apart from increasing inflation risk, we also understand that the global growth has been slowing down due to the two reasons I mentioned. It's Ukraine and U.S. Fed rate hike, together with IMF's growth projection, has now been dropped to 3.6%, down by 0.8%. For Euro area, because they have a stronger reliance on energy supply, you will see a more drastic drop in the growth projections. Whereas in the U.S. market, the major concern remains inflation risk, leading to a concern whether the U.S. Fed rate hike will come earlier. So for inflation expectations, they have been on the rise, mainly due to the supply chain being affected and the soaring energy prices. The other concern is the labor force. For this chart in the middle, red represents demand and the blue line represents supply. In the past 6 months, you will see that demand far exceeds supply. And the supply of labor has been affected by the increased retirement population. And what is related is the chart on the right-hand side in relation to the wage growth in the past 6 months. You see a sharp increase, and there is a concern that with increase in wages, there may be increase in prices as a result, leading to inflation, and that's a vicious circle, which is a concern of many. And that is why the Federal Reserve may need to step up the interest hike exercise to prevent and to tackle this vicious circle. For this blue line on the left-hand side, this represents the Fed funds rate expectation. For the one in black, this represents the situation at the beginning of the year, and you see a rather substantial increase. Market expects the rate to go up by 2.6%. Comparing to the beginning of the year, it was only 0.7%. So the attitude towards rate hikes has changed. In fact, in the last cycle, 2015 to 2018, it only rose by 2.25%. So it's increasing at a quicker pace and stronger magnitude. And in fact, the Federal Reserve is holding another joint meeting, and there is the prevailing expectation of another 0.5% hike. And a strong U.S. dollar leads to another concern, and that is whether capital outflow will take place in emerging economies in the Asia-Pacific region. In fact, in the past few months, we have identified this emerging trend of fund outflows from APEC region. As for the mainland, steady growth has been maintained. In the first quarter, it was 4.8%, led by consumption activities. And in the first quarter, if we take a look at the red line in terms of real estate investments, with relaxation of certain real estate related measures by the mainland authorities, we see a substantial increase. But with the epidemic situation in Shanghai, Beijing, etc., we will see a short-term pressure as far as real estate is concerned, but then there is still ample policy support. So there is room to adjust the policies. And in the medium to long-term outlook, we expect a steady growth. Locally, as we all know, we've been affected by the fifth wave of the epidemic. So on the left-hand side, be it the SME's Business Receipts Index or the PMI, we have registered a drop. And because of the impact of the fifth wave, the unemployment rate increased to 5% in March. And the unemployment rate for sectors such as retail, accommodation, and food services, the unemployment rate was as high as 8.9%. But with the epidemic subsiding, social distancing measures are progressively being relaxed, and together with the stimulus brought about by the consumption voucher scheme, we do expect our economy to recover very slowly. And if you take a look at the chart on the right-hand side, with gradual relaxation of social distancing measures, we have witnessed an increased people flow. As for the Hong Kong dollar market, the blue line represents the Hong Kong dollar exchange rate. Because of US Fed rate hike expectations, Hong Kong dollars has been on the weak side, and it's now close to the weak side convertibility undertaking. But as far as the Hong Kong dollar's position in the exchange market is concerned, the depreciation has been orderly and smooth. Together with some 300 billion reserve in our banking system, we are highly liquid, and we don't see any risk of liquidity exodus in the short term. And as I explained before, when the net interest margin between US dollar and Hong Kong dollar increasing under the Hong Kong exchange rate system, linked exchange rate system, there will be more and more activities with people buying in US dollars and selling Hong Kong dollars. And hence, we may trigger the 7.85 week side convertibility undertaking. And if that happens, the HKMA will buy in Hong Kong dollar and sell US dollar from the to the market. So, and as a result, the Hong Kong dollar liquidity will gradually decrease for Hong Kong dollar to appreciate gradually to a level closer to the US dollar exchange rate. So this is all within our expectation. If we reach 7.85, this is only within expectation. There is nothing to worry about. And in the next slide, the total deposits in the first quarter have increased by 1.1%, and for Hong Kong dollar deposits up by 2.2%, so it's quite stable. As for the property market, because of equity markets fluctuations in the first quarter, according to the RVD's housing price index, the figure has dropped by 3.2%. But with the epidemic easing, according to the Center City Leading Index for April, the figure has increased. This is despite of a drop in the number of transactions, and many property developers have delayed the sale of first-hand flats. But we reckon that the pace will slowly pick up. And we're approaching the end of the fifth wave, and We expect the Hong Kong economy to gradually recover, but meanwhile, the economic outlook is subject to uncertainties in the external environment, including Ukraine situation, which affects the global economy and cause inflationary pressures. And if inflation risk continues to remain high, the other uncertainty externally is the U.S. Fed hikes pace and scale, and whether there will be capital outflows from the Asian emerging markets. But be reassured, as I explained just now, even if capital outflows take place, the exchange rate could reach 7.85, and with good financial fundamentals in Hong Kong, we are resilient against these fluctuations, and will keep in view the situation in the global economy to ensure stability.
Yeah. Okay. Also, we'll talk about the banking sector. Right, let me take you through the supervision of the banking sector. If you've been to this briefing before, you must have seen a chart like this. Credit growth in the banking sector, 0.9% or 5.6% in annualized rate. These may not be particularly accurate, but this is good for reference compared with the previous 2 years. The credit growth is not all that bad. Now, in terms of the quality of asset, that's the red line on the chart. Last time we were here, we explained that in Q4 last year, we anticipated that the asset quality would worsen slightly. Towards the end of the year, we saw that in terms of the classified loan ratio, from 0.81% to 0.88% from Q3 to the end of last year, compared with 2020 or before. This is not a particularly high level. In the long run, over 20 years is about 1.8%. So this classified loan ratio is not at a particularly high level compared with other jurisdictions. In Q1, as we understand, the fifth wave took a toll on the economy. We anticipate that there will be an upward pressure on this level. We don't particularly worry about the supervision side because it's not high compared with other banking centers. Second, there is very high capital adequacy ratio. Now we have the coverage ratio. This is 10%, not including the collateral. It is 170% if you take into account all the collaterals. So we're not particularly worried. But the asset quality remains something that we would pay attention to. Other than the banking sector, the pandemic also took a toll on the economy. So we're looking at how the banks can support the actual economy. At the beginning of this year, together with the banks for the pre-approved principal payment holiday scheme, this will be extended for another 6 months to the end of October. We are monitoring the situation. We are offering another option in this extension. We heard from the customers that they would like to pay a bit of the principal because that would stand them in good stead. So with the extension of 6 months, we are offering another option to the customers. If they're so willing, they can discuss with the banks to repay 20% of the original principal repayment over a 1 year period on a voluntary basis. We haven't got any data about the number of customers who will opt for that. Maybe that's because of the impact of the fifth wave, and the customers are more likely to rely on the PPPHS. But the take-up rate stayed at about 3%, not a very high level. when we launched this 2 years ago, the usage rate was about 16%. 16 out of 100 used this particular scheme. The level has dropped back to 3%. This is something good because many of the customers do not see the need for this scheme. There is certain initiative about the legislative amendment. On the 17th of April, we have introduced some amendments. In terms of equity investments in funds, we have introduced some amendments. This is of a technical nature, and this is also part of the Basel requirements. On the 27th of April, we introduced all these amendments by way of negative vetting. Going forward, there are certain other amendments to subsidiary legislation to be introduced, like Basel III final reforms. By the middle part of this year, this should be coming about. So all the legislative amendments and also the exposure limits, all these amendments will be taken to the Council for scrutiny. I hand you over to Edmund. Thanks very much, Arthur. Howard? Edmund. Thank you, please. Right, it's loading up. Right, thank you, Chairman. There are 3 slides about the development of the financial market. This is the Mutual Market Connect schemes. Over the past couple of months, things are developing smoothly and steadily. The renminbi has come down in values, but we have the northbound trading under the Bond Connect, and this is remaining active. In this quarter, every day we have a daily turnover of 32.8 billion, up 34% year-on-year. Southbound trading has also started. It is operating smoothly, and we have a lot of transactions there. And these are institutional investors from mainland, and they're investing in bond to the tune of 45 billion Hong Kong dollars. Wealth Management Connect has started a couple of months ago, and it is operating smoothly. To date, there are 24 eligible Hong Kong banks that have successfully commenced services with their mainland counterparts. There are 24,000 individual investors that have taken part. Now, this goes hand in hand with the offshore renminbi center. So we will be liaising with the mainland regulatory authorities to see how we can optimize the mechanism. Perhaps of qualified products and qualified investors. We'll look at these areas, but at the same time, we'll also look at the liquidity of renminbi and all the risk management measures to facilitate the international investors in this area. Developing Hong Kong's financial platform, I'd like to say something about the green finance. Last year was there was a bit of a breakthrough in this area. We have issued the green bond to the tune of 57 billion US dollars. That's 4 times that of 2020. Hong Kong is one of the largest green bond issuing jurisdiction in Asia. We're not restricted to institutional investors. At the retail level, we are also embarking on this. In these 2 weeks, we are getting on with the retail green bond subscription, and we're also promoting this in SMEs. Now, we have started the Green and Sustainable Finance Grant Scheme. We have lowered the entry threshold from $200 million to $100 million, hoping that more enterprises would be able to get the finance. And also in terms of asset and wealth management, the government are promoting investment by family offices. We are looking at some tax concession legislation to lure the family offices. We have completed the consultation. People are mostly in favor of these amendments. The last one I'd like to talk about is the crypto assets and the stable coins. I said last time that at the beginning of the year we have published a discussion paper, and let me bring members up to speed about the consultation period. The consultation ended in March. We have received a lot of feedback. Mainly, they are in favor of a regulatory framework for the stable coins for payment-related purposes, because this would be good for the long-term development of this class of asset. We will be collating all the feedback, and internationally we have seen a lot of discussions. In the coming year there will be quite a lot of recommendations. The Hong Kong MA will pay particular attention to these standards at the international level and how stable coins should be monitored. And we will be coming back to the panel with further details. I defer to Howard. Thanks very much. I'd like to talk about the financial infrastructure. And basically, this is about the payment system between banks and also the custody of bonds and so on. I'd like to highlight some of the systems that the members are more familiar with. Fast Payment System, FPS, and members are really familiar with this. This was launched in 2018. It's been some time now, and we are still witnessing a rising trend, and this is really a healthy development. On the part of Hong Kong MA, we have to make sure that the system is running smoothly, and we're also adding certain new functions like transfer by means of ID card and the linkage with the apps and so on. We'd like to extend the functionalities of the FPS. Second, the CMU, the Central Money Markets Unit. This is being used between banks, and this is not something for the general public. As I said, as we mentioned, there is the Bond Connect, or the connectivity between the different parties count mainly on this CMU system. This is providing an important infrastructure. The mainland is developing rapidly, and in the CMU we are upgrading the functionalities. In the coming year, we do have a major plan in terms of the usage and the functions, and there will be a further upgrading. We have launched the liquidity system. We are developing this system to make it an equity custody platform in Asia, and I can fill members in on further details going forward. Let me say a little bit more about the fintech initiatives. We have a number of initiatives here. I'd like to highlight some of them, maybe two. The second one, the Retail Central Bank Digital Currency, or CBDC. A couple of days ago, we have published the second discussion paper. The first one was published towards the end of last year, and it was about the technical detail, and this one is about the design and the policy matters. We will be collecting public views in a month's time, and I understand that this panel would like to have some discussion on this very subject. We all welcome this. We don't have any finalized idea as to whether this is going to go ahead or not. And maybe in a year or so's time, we will have better idea about this.
The second highlight is commercial data interchange, CDI. We mentioned this initiative before, and we are following our plan, and we expect to launch the CDI officially by the end of 2022, and this will allow SMEs to use different platforms to apply for funding. We hope to provide greater assistance to SMEs. The next topic is investment performance of the exchange fund, and as mentioned by Chief Executive Yu, in the first quarter of this year, the markets were fluctuating substantially with a declining trend. This shows the major developed market and the sovereign bond yields. Apart from a very steady situation in Japan, the pips have increased by 60 to 80%. And according to the Bloomberg Global Bond Index, in the first quarter, it dropped by 5.6%. And that's the biggest quarter-to-quarter drop since 1973. As for equity markets, again, the situation hasn't been satisfactory. Say for the Hong Kong LT market, it dropped by 6%. As for the SPI, right here, the drop was 5.7%. Now, an announcement of our investment return for the first quarter. In the first quarter of 2022, we recorded an investment loss of $55 billion. This is due to a number of reasons: losses in Hong Kong equities and other equities. As for foreign exchange, with appreciation of US dollar, this somewhat puts pressure on the Hong Kong dollar together with hedging activities. All in all, we've been able to record a profit. And as mentioned previously, we should not just focus on the quarterly performance of the exchange fund. This is, after all, a major fund, and we should have eye on the long-term growth. Well, altogether, we, for 3 years, have made an investment income of $262.2 billion. Of course, we don't want to have an investment loss, but we need to brace for market fluctuations. And we have put in place resilient measures. And that accounts for about 1% of the total reserve. As for the equities market, about 5%. We want to take a more conservative or defensive approach, so that we'll be in a better defense position when the market or the prices rise. As for income and expenditure, may I invite members to read fee payment to fiscal reserves, $11 billion. So by putting it in a bracket, we are able to make a fee payment to fiscal reserves. So there is a positive return over 6 years. So very briefly, we come to the last point, the Hong Kong Mortgage Corporation. These are the updates as announced in the budget, and I think members are familiar with them. The message basically is that after the Financial Secretary announced these measures in the budget, we continue to take them forward and allow SMEs and individuals to apply for mortgage loans. Every now and then you may read from media reports that fraud cases under the SFGS using false documents, etc. And we have been mounting enforcement operations with law enforcement agencies, and we will be very careful to minimize criminal activities. Thank you, Howard. The floor is now open. Members, we have 13 members waiting to speak. If you haven't pressed the button, please do so now. After I read out members' names, I'll draw a line. We start with Mr. Ronald Chan, Ms. Starry Lee, Mr. Chan Kim Po, Mrs. Regina Ip, Mr. Rock Chan, Mr. Holden Chow, Professor Nelson Lam, Mr. Sunny Tan, Dr. Stephen Wong, Deputy Chair, Dr. Tan Yue Heng, Mr. Duncan Chiu, Mr. Bill Tang, and Mr. Robert Lee. Any more? Well, we have many members waiting to speak, so I'll limit each member to 4 minutes only. And please make sure you give time for the administration to answer your question. The 4-minute speaking time limit will be strictly observed. Mr. Ronald Chan. First question about the exchange fund. According to Chief Executive Yu, since the beginning of this year, there have been fluctuations both in the global equity and bond markets, and the exchange fund may suffer losses as a result of these fluctuations. And there are resilience measures such as increasing cash in position and expanding the long-term growth portfolio. So my question for Mr. Yu is that in relation to fixed rate and float rate bond portfolio, can you tell me the percentage and also non-US dollar asset, and will there be a difficulty in adjusting the proportion of the two? I asked a few times about the long-term growth portfolio before, and your answer is that after a long-term commitment, it will not be withdrawn soon. If you want to expand the long-term growth portfolio, as you've indicated, shouldn't you be starting now? And also about the aggregate balance in the banking system in Hong Kong. This is an important indicator of the liquidity of our banking sector. And I understand that in the first quarter, the liquidity position has dropped. We have the linked exchange rate system, but our pace of interest hike is not the same as a US hike. And there is a media report suggesting that the aggregate balance could drop to only $100 billion. If that is the case, would it have any implication on the Hong Kong dollar interest rate? Let me take his questions. Mr. Chan correctly points out that we have been sandbagging in recent months. And we also have some short-term adjustments. In terms of bonds, the adjustments between the fixed rate and float rate bond holdings is one of our strategies. Most of our bond holdings is fixed rate because comparing to the fixed rate market, there is a limited room in the floating rate market. We want to hedge against the impact brought about by increased interest rate. As of the end of 2020, according to our annual report, we hold 90% of Hong Kong dollar and US dollar in the fund, meaning that we have 10% non-US dollar asset. This is because Hong Kong dollar is pegged to the US dollar, and very soon we'll be able to read the report regarding the as of the end of 2021. There has been a slight increase in non-US dollar asset, but only very slightly. As for the long-term growth portfolio, Mr. Chan again is right. This is about an investment commitment. Usually, the fund manager, after taking on a 3 to 5 year commitment, will need to look for opportunities of investment. And if we need to reach that level, we are doing more than what we've committed in terms of the investment amount. And this is what we have been doing. So let me reassure members. As for the aggregate balance, well, this is not easy because, first of all, we need to consider the Fed interest rate hike and its pace. And then we need to consider the arbitrage activities in the market, and also the actual demand and supply of Hong Kong dollar in the market. This is somewhat affected by the equity market and the IPO performance. So definitely, a drop in the balance is expected, but we'll keep in view the rate of outflow. Ms. Sari Lee. Chairman, we have the Russian-Ukraine war, and we also have the U.S. Fed Reserve interest hike coming on fast and strong, and definitely there will be fluctuations. As for locally, apart from external fluctuations, the epidemic has also hit us in terms of capital flow and the manpower situation. So my first question relates to our liquidity and the capital outflow situation. I think now is a time when we have the most fluctuations. Although you mentioned we have strong fundamentals, can you tell us the worst scenario? If the Ukraine war continues, many countries will be affected, and together with a U.S. interest hike, how will Hong Kong be affected? Where is our bottom line? CE, thank you, Starry, for the questions. First, about capital and talents. In the last quarter, the capital situation was stable. Because of the interest spread, inevitably, there would be certain arbitrage activities. But the situation is not serious. On the contrary, because of the weak equities market, Hong Kong dollar has been on the weak side, but on the whole, in the past quarter, the situation has been stable. In fact, the total deposits have slightly increased. And talent, of course, is a major concern. There is competition around the world, and together with factors such as the epidemic and the anti-epidemic measures, many financial systems are under this challenge, especially when many financial institutions have set up headquarters, their Asian headquarters in Hong Kong, and their management personnel demands flexibility so that they could go to other places to tend to the APAC business. And in fact, recently, we have made adjustments to the flight suspension mechanism and other quarantine measures. And the sector also responded by adjusting their policies. For example, their management personnel may go on longer trips before coming back, and will also help relay these concerns to the government for consideration. As for external challenges, as I said just now, we need to closely monitor the situation, and we need to build up our resilience. Our banking sector should be prepared, such as stress tests and other responsive measures. Like you said, it is difficult to gauge the situation in the future, be it geopolitics or adjustments in the financial markets. These are different factors giving play to the future outlook. As for the implications on Hong Kong's future, we do have preparations and responsive measures. As for the bottom line thinking, as you mentioned, we've always get ourselves prepared, so be reassured. What about the worst case scenario? Do you expect this to happen in Hong Kong? Oh, please stop the timer. Well, it's hard to predict because, for example, we don't know the inflation situation and the pace of QE tapering in the U.S. market and its implications on the local market. And it's even more difficult to predict the Ukraine-Russian war because, after all, this is about politics and it's not for financiers to give projections.
主席，
就崔建波。Paper 217/2022 Bracket 2. Household debt. Now in Hong Kong, the household debt is from 2005, 54% rising to 93%. And also the household net worth to liabilities ratio, you have listed all these countries, Singapore, Japan, and then less than 8%, but it is 12% in Hong Kong. Now my question is, given this trend, given the interest rate hike situation, what should we pay particular attention to? Now we have seen a sharp rise in the household debt down to 90%. That's question number one. Second, the chief executive had mentioned the brain drain. Now there are two aspects to this. At the top echelon, we are seeking to have a regional headquarters in Hong Kong, and this is something that we're very pleased to see happen. But as we learned from the newspapers, a lot of the headquarters are shifted to Singapore, and this is not something we'd like to see happen. You mentioned the quarantine measures being eased. That would be a good idea for people to be home quarantined, and it's not a good idea to separate the children from the parents. And this is something that the parents are not happy about, and they feel incentivized to leave. And also the middle ranking, a lot of people are leaving Hong Kong post-COVID. How can you restore confidence in Hong Kong? Singapore is really profiting from that. The service departments are chock-a-block full, and we are seeing a brain drain in Hong Kong. How do we lure the talents back to Hong Kong post-COVID? Chief Executive, right? Household debt. Mr. Chen has a point there. The ratio is increasing, but it is a leveling off. Yeah, we have seen a sharp rise before because of the shrinking economy, and this is all in proportion. In terms of household debt, a big chunk has to do with the mortgage. The LTV ratio is tightly controlled in Hong Kong, and the debt servicing ratio is also strictly regulated. We do a lot of stress tests. If the interest rate goes up by 3%, people would still not be spending more than 6% of the income on the mortgage payment. So all these are rigorous requirements. We feel that despite the interest rate hikes, the burden on the mortgage payers can be well under control. And the right-hand side, there's a household net worth to liabilities ratio. We shouldn't just look at the liabilities. We should also look at the assets, which are very high as well. And the people have the assets, although they have the liabilities, so the balance sheet is pretty strong. By comparison with the other jurisdictions, we are not that bad. In terms of talent, we have to offer people who make Hong Kong their headquarters the right condition to get on with their work. We are liaising with the regional CEOs. We haven't seen a lot that have migrated out of Hong Kong, but they do experience their own difficulties in their own ways. Like I said, this relaxation has assuaged their concerns. This year, we are doing a lot more speaking engagements. We have to tell the regional CEOs the opportunities in Hong Kong, the right condition in Hong Kong, because a lot of the decisions are not taken at the regional level, but at the headquarters. So this weekend, together with Howard, we will be attending meetings in Europe to promote Hong Kong, to tell people the conditions or the opportunities available in Hong Kong, so that they would be persuaded to keep their headquarters in Hong Kong. Right, thanks very much, Eddie, and your team. The chambers of various organizations, if you want our support, we would be only too delighted to get in touch with the relevant chambers and organizations to render their support. Promotion and marketing are very important. Mrs. Regina Yip. Chairman, thank you. I'd like to take up the issue of geopolitics and the implications in Hong Kong. There are signs that the Russian-Ukraine war is likely to escalate, and there are talks about nuclear weapons being deployed by President Putin. On the 17th of March, some senators put forward the CRB Act in the U.S., and they are making countries to fall in line. If they don't fall in line, they're likely to be kicked out of SWIFT. What implications would there be on Hong Kong? Now, they perceive Hong Kong as very, very much part of China. We don't enjoy any privileged position. If this act is going to be endorsed, they have introduced the act. There will be some time before the actual voting. How do you think we should react to this? Chief Executive, thanks very much. We are looking at this act. There are two acts, the CUPSEED and American CUPSEED Act. These two acts in the U.S. are really comprehensive. Therefore, places that are assisting in the payment for Russia, they will consider some sanctions. We have to realize that at the end of the day, how these two acts will be voted on, we're not sure. The two houses are discussing this. Inside, there are mentions of reports are being submitted to the State Council and so on. We are monitoring the development. That the geopolitical changes are very complex and difficult to anticipate. So what we have to do is we are not sure how the geopolitics are going to be panning out. Maybe something is done about SWIFT, but we do have the contingency for different scenarios. And we are communicating with the banking sector. They all also have to have the contingencies. And if these scenarios were to occur, there will be implications on Hong Kong. But we have to have the contingencies in order to minimize all the relevant risks. You mentioned American Complete Act. The idea is to contain China in Europe and the U.S., and they have made huge investment in the mainland and Hong Kong. Will the Hong Kong MA be persuading the investors, hoping that the U.S. government will have regard to a whole host of factors? Yes, indeed. Other than the promotion work, we are communicating with the international investors. Like you said, they do have huge investment in the mainland and in Hong Kong. If these acts were to be passed, then there will be huge implications on their investment. And I think they have to speak up in their own ways, and we will be communicating with them on this. Now, these senators or the lawmakers are making these alarming proposals. I agree with Mrs. Yip there. And through our offices there, what should be done. I think something ought to be done. We cannot sit idly by without reacting or responding to this. Yes, I'll be reflecting this to the SAR government in different American cities. There are offices there, and I'm sure that they can follow up on this. Mr. Rock Chen. Chairman, thank you. Since Evergrande problem occurred, we have seen all these problems with the real estate developers, and they are restructuring their debts. And I'm sure that similar occurrences are likely to happen in future. And the Hong Kong MA is an important supervisory body. How are you going to help the investors who are suffering financially? And how can you protect the financial interests of the investors? Second, we've seen some cases of problems. Some have opened up an account in the mainland, but because of the closed border, they cannot go into the mainland, and their bank accounts have become dormant. I know that the Hong Kong MA has issued some guidelines to the banks in Hong Kong to help the Hong Kong residents to reactivate the dormant accounts. So if I may put this to Mr. Yu, what progress has been achieved? Well, I defer to Arthur. Arthur? Thanks very much, Mr. Chen. About the real estate in the mainland, the risks arising from the real estate developers from the mainland, it is our duty to maintain the stability of the banking sector. Now, for the investors, it is something for the SFC. Now, in terms of the banks, in relation to high-risk exposures, starting from many years ago, we started looking at the risks associated with the private enterprises. The mainland is very cautious about the management of these exposure. There were some organizations that got into financial trouble, and we have been communicating with the sector and the members of the public. And these risks do not take up a large proportion of the banking risk. So the risk for the banking sector is still under control, but we will be monitoring the situation. There are new developments that we should pay attention to. Mr. Chen's second question is about the dormant accounts. Now, there are some customers that reflected this to us, and in some cases, their accounts, like their home re-entry permit has expired, and they have to renew the documents, but they have to turn up in person in the mainland to get this done. If they cannot get this done, their accounts would be frozen. And we are aware of situations like this. And like Mr. Chen said, we have asked the banks to render assistance to the customers, because these are livelihood issues. And these banks may not be local Hong Kong bank accounts, but I'm sure that through local banks something can be done. We published a document earlier to clarify that the banks can facilitate the customers to reactivate their accounts. And that doesn't give rise to any supervision concerns. And some said that this would be against the law, because this is a boundary issue. Now, we have clarified this with the banks, and we are clarifying with the relevant banks, and hope that they will get something done in the near future.
Next, Mr. Holden Chow. Thank you, Chairman. I have two questions. First, as mentioned in today's presentation, the U.S. Fed interest hike is to be expected, and there are other factors at play, such as the Russian-Ukraine war. Now, after the interest hike, As mentioned just now, we do have an interest spread with the U.S. market, and this inevitably would lead to an exodus of capital. Well, of course, at the moment, we do have an interest rate difference. If in the future we follow the U.S. pace of interest hike, then if the margin remains, then are there other measures to stimulate the economy? Well, of course, the consumption voucher scheme provides a stimulus. I want to know what you are going to do about it. That's the first question. Second, again in today's presentation, about the 100% loan guarantee scheme, well, the SFGS, for example, it has been very useful. But then, as admitted by the chief executive, there is black sheep committing fraud or even inciting others to commit fraud as well. So will you tell us on a regular basis the law enforcement operations you have? In fact, you earlier neutralized a fraud syndicate. You need to make these announcements to instill confidence in the public, and you want to prevent black sheep from deceiving making use of the scheme to commit fraud. First, on interest rate hikes, as I explained earlier, we need to wait until apparently there is a difference between the Hong Kong dollar interest rate and the US dollar interest rate, and by then there will be more apparently activities involving the outflow of capital, and this would lead to a slow drop in our liquidity. This is not our doing, but rather the market's operation. So there is a time lapse. We need the spread to be to a certain extent before we register an interest rate increase. However, on this occasion, we noticed that the pace of U.S. interest hike is quicker, so the time lapse is expected to be shorter, and we will follow the footstep only that there is a concern when banks will adjust our interest rate locally. From previous experience, there would be a buffer because of the longer time lapse. Hong Kong's interest hike will not immediately follow the U.S. hikes, but that depends on a number of factors, such as, for example, the pace of economic recovery and how soon we reopen our borders and boundaries, and the stimulus of the consumption voucher scheme and different investments taken forward by the government, such as a Lantau Tomorrow vision. This would mean stepping up our efforts. As for the other question relating to fraud cases, be reassured we do closely liaise with the law enforcement agencies, and we do make announcements whenever we crack down on syndicates, as we have done to salvage public confidence. Next, Professor Nelson Lam. Thank you, Chairman, and thank you, HKMA, for coming. I've always acknowledged the contribution of the Hong Kong MA in maintaining financial stability in Hong Kong. Like Mrs. Regina Ip just now said, the global landscape has changed. We have different competitors around the world, and I understand that you have attached importance to maintaining financial stability. We have the 3 stabilities and 4 defense lines. I want to know whether this will be updated. I understand that financial tools such as a SWIFT can actually be used as a weapon in the sanctioning effort. So do you have any preparation for the worst case scenario? Well, of course, this is sensitive, but are you prepared? The third question, to pick up on Mr. Holden Chow's point, that is the increasing spread between the interest rates. The chief executive commented that the time lapse may be shorter. In the last cycle, it took quite a long time, and the Hong Kong interest rate that didn't go up even after the U.S. rate reversed. But at the moment, it affects property prices, and more importantly, you should make sure you level with the public. The last question, some elderly citizens have told me that they are so used to using Octopus card and they wouldn't want to receive the $5,000 in batches. So that's just a technical point. In the long run, are you going to solve the problem? Of course, we wouldn't want the financial secretary to roll out another round of consumption vouchers because this represents a poor economy. Well, I'll defer to Howard to take the last question. On financial stability, yes, we talked about the 3 securities and 4 defense lines. This is a universal tactic, and I will continue to update our document. And next point, we understand the complexity of geopolitics. So in terms of the worst case scenario and SWIFT as a weapon, we do have a plan. Be reassured. Implications of interest hikes. On a regular basis, we have communication. We also publish articles. And whenever we observe outflow of capital, I would explain the implications and comment on, say, when we will have an interest rate hike. And of course, I agree we should impart with the public more information so that the public can manage their own risk as well. On the point of Octopus, Howard, yes, we understand that some citizens find it quite inconvenient and that the disbursement should be made in one go. However, this is the current practice because of technical reasons and the legacy. Previously, the maximum amount to be stored in the Octopus card was just $1,000. It was later increased. Well, we can overcome the technicality, but it takes time. And your comment will be reflected to the government and see how we can improve things. Next, Mr. Sunny Tan. Thank you, Chairman. I have 2 questions. First, responding to Mr. Regina Ip and other members' point, I also like to talk about risk management. I'd like to raise 2 points for your consideration. First, in relation to the possible scenarios and the mainland experts' opinion on the financial system, there should be more communication so that we can all put on a thinking cap together and leverage on collective wisdom instead of just relying on the SAR government. And about trade wars, the U.S.-China trade war and the relevant U.S. acts. Well, I always have the feeling that the SAR government may not be comprehensive, after all, in considering these possible scenarios and also in collecting information. Maybe you should approach stakeholders more often so that you get more information to help you make decisions. The other point is about I Am Smart. The commercial version of the I Am Smart is the crux of my question, and subject to the previous proof of concept study, there should According to the answer, the HKMA will explore the commercial feasibility of using IM Smart commercially. I want to know whether you need more time. I'm not sure, because IM Smart may be related to the HKMA, maybe not. I just want to make sure that the app is ready for our use sooner. Howard will take the question on IM Smart. As for the first question, again, let me reassure you that when we consider different scenarios and our responsive strategies, on many fronts, we have close communication with the People's Bank of China in terms of market development, renminbi business, or financial security as a whole. We do have a regular communication channel because we are facing similar geopolitical situations, and we have opportunities to exchange our views. And like you said, we do take views from different parties and adjust our strategies accordingly. As for the different U.S. acts, we keep in view the situation, and we also have ETOs monitoring the situation. And we do provide analysis to the government, including the Financial Secretary's Office and the Financial Services Bureau in the Treasury. So we share our analysis with them, so that we put up our antennae and to receive more information. Howard, thank you, member, for the question. IM Smart is a certification app developed by the government. Now, regarding commercial data interchange, we want to make sure that apart from individuals, business enterprises can also make use of the online certification feature. Now, after the launch of the IM Smart, we then started discussing with the government, and we'd like to take over this part. And in the coming months, we will be working on it. And by the time, say at the end of the year, when we launch the CDI, we'll be able to meet the needs, because there are technical details to iron out, such as whether an individual can represent the shareholder or the director or the business entity. Dr. Stephen Wong, I have two questions. First, the pace of U.S. Fed interest hike is unknown. We only know that there will be a major increase because of the inflation in the U.S. and also in other countries. It's a record high. And just now Eddie mentioned that the HKMA has constantly been monitoring the situation and making adjustments. We have over 60% of cell phone properties having paid off their mortgages, as we have different schemes at the same time helping first-time home buyers so that they only need to pay 10% as down payment or 20% as down payment in order to obtain a mortgage loan. Have you considered that in the event of the property prices coming down by 10 to 20%, how many mortgagees taking out such mortgages will become affected by the negative equity? And to what extent will this bring risk to a banking system in Hong Kong? The other point is about page 26. I understand this relates to the CMU's development, Central Moneymakers Unit, and this is of course a good deed, and this is a good direction for making Hong Kong the ICSD. I understand that the Hong Kong Stock Exchange also has a CCAS settlement system. That's for the Hong Kong market. Have you considered the coordination between the two systems and whether there can be any collaboration, or whether developing an independent entity would help Hong Kong develop as an ICSD?
Let me take the first part of the question. CMU, I defer to Howard. Now, for the mortgage level, the interest rate hike is only one of the factors. The property market is affected by a whole host of factors. If there is an adjustment, a downward adjustment to the property market, would there be any negative equity cases? Now, we don't have the numbers with us, although we don't foresee the number to be too high. The 80–90% of the mortgage is only a small portion of the total mortgage pie, but people have a very strong repayment capability. Now, for the 80 or 90% mortgage, they have to be self-occupied, and there is also the stress test, so the payment capability remains strong. Arthur got a point to make? Yes, if I may. About the high LTV ratio and the impact. Now, when people go for the high LTV ratio, they have the mortgage insurance, so the risks exposed to by the bank will be covered by the insurance. Now, we have the LTV ratio, which is very, very high, so this is really under control. Howard, CMU. Now, we're communicating with the Hong Kong Exchange over the CMU. We have had a lot of communication with the previous CEO and the existing CEO. Now, different models do have their pros and cons. Now, the capital and the confidence is high, and we keep our options open. What we are doing is to make sure that the services will be upgraded. As to the individual approach, I think we can look into this as time goes by. Mr. Tan Yuexian, Tan Yuehang, Chairman, Chief Executive. This year, we face a very highly volatile financial market. The Hong Kong MA has been doing a lot of work in fighting the pandemic and supporting the market. Now, we've seen the losses made at the exchange fund. Now, I've got three questions for the Hong Kong MA. There was a report that the mainland supervisory body talked about the U.S. Freezing the Russian assets, and they are resorting to all measures, and freezing the asset is one of them. If I may put this to the Hong Kong MA, how much assets do we have in the U.S. market? And second, for the monetary system, you are trying to strike a balance. We do have the linked rate system, which has been serving as well. But there are limitations, and this has taken away the independence of our monetary system. Hong Kong is hit by pandemic, and the economy is in a doldrums. The budget earlier has put forward a lot of stimulus measures, and the financial measures and monetary measures go hand in hand. Now, in terms of stimulating the economy, what considerations do you have in terms of using the financial measures? Third, we talked about the Wealth Management Connect. 24,000 customers are taking part. It doesn't seem to be very vibrant. It is a vast market, but we only have a very small number of people taking part. And why is it that we have a small number of people taking part? What measures do you have up your sleeve to boost the vibrancy of this Wealth Management Connect scheme? couple of questions there. The U.S. is likely to resort to various sanctions. As I said earlier, we face the geopolitical situation, which is highly complex. There are different scenarios, like the action taken against SWIFT and also the freezing of assets. We do have different contingency measures to cater for different situations. In terms of assets, we have the fiscal reserves. A lot of the assets are in the U.S. and in Europe. If what you said, the extreme scenario that you mentioned were to occur, we can handle that. Now, for the link rate system, you've got a point that there are limitations. In order to maintain the interest rate stability, we cannot resort to the interest rate to stimulate the economy. And there is only one tool to achieve the purpose. Things are pretty turbulent at the time. Hong Kong is a small and externally oriented economy. The stability of the interest rate is of paramount importance. So we have to count on the financial measures. We have bountiful reserves, so we do have the capability to handle this. The third, about the Wealth Management Connect, we do liaise with the PBOC. We can certainly improve the flow of things. The border remains closed. Can we have more flexibility for accounts to be opened remotely? And also the promotion and marketing on both places, there can be more flexibility. And also, in terms of sale, can there be any cross-boundary sales? There can be certain flexibility built into the system. All these we are liaising with the mainland counterparts. If we can achieve progress in these areas, then there would be more participants taking part. Stephen, about the stable coins. Right, I'm grateful to the authorities for all these innovative ideas. Now, for the stable coins, the virtual asset, it is more than $3 trillion. Now, things are in a turbulent situation. If there are interest rate hikes, then the virtual currency can certainly offer some opportunities. Stable coins seem to be more stable, a safer asset class, and I go along with this. Now, there are 8 questions in the white paper. You mentioned that there is a groundswell of support and there will be a regulatory regime to be put in place. What is the timetable for this regulatory regime? And you said you have regard to the global situation. President Biden has signed an order to review the cryptocurrency. I don't think we should be waiting. And are you going to be following up on the stable coin? And you move on to the HKD and the e-wallet and so on. Can you share us with the timetable in these areas? Second, there are many different types of stable coins. Mainly, they are US dollar based. If we want to do it Hong Kong dollar based or RMB based, is there any room for the stable coins to be HKD based or RMB based? Would they be issued by the Hong Kong MA or would they be issued by the banks? I think that has to be some authoritative body to issue this. And also the octopus. Now, we had the limit because people were worried. They worried about people losing the octopus. That the octopus is on the basis of true identity, and certainly that can be traced. We can certainly raise the limit. Howard, Edmund, if I may respond to the stable coins First, the legislative timetable. In the consultation document, we have some preliminary ideas. Like 2023, we can draft the relevant legislation. But as I said earlier, it all depends on the development globally and whether there is any international standard regarding the supervision framework for the stable coins. As an international financial center, we have to have regard to the international standards. So the timetable is not something that we can control. There are many international organizations that are contemplating rolling out the stable coins in the coming year. We will take reference from that and see when the timetable can be put forward. Like the member said, many stable coins are US dollar based because in a lot of the cryptocurrency transactions, they use the stable coins and that accepted internationally. Of course, there are other currencies that are happening. As a regulator, we have to make sure that what we launch will be conducive to the use, and we like the market to develop on its own. Howard, the member has got a point. The e-wallet is an easier thing, but most people are using the physical card. Other than the card, we also have the terminal and the whole host of systems that have to be changed before this can happen. So we will have a look at this holistically. Mr. Bill Tang, Chairman, thank you. A question about the livelihood, if I may. In 2020, the government launched a scheme for the small owners to ease their burden. So we have the principal moratorium scheme, and the COVID has dealt a blow to people's lives. In 2020, people may have opted for the principal moratorium that the small owners are coming to seek help because of the fifth wave, because of the hardship, and they'd like to have an extension. Of course, there are certain level of risks, but I hope that the Hong Kong MA will render some assistance to these small owners who are really struggling to keep their head above water. Second, inflation is the inflationary pressure is really high globally, and this is causing some impact on the property market. People are having a lot of hardship, and not least the middle class people. If the property prices are going up, what measures do you have to guard against an overheated property market that will be out of step with people's affordability? And what is your assessment in this regard? Arthur. Well, let me take the question about the principal moratorium first. And there are two things here. First, we put forward this pre-approved principal holiday, and this is benefiting 130,000 people. Now, this is not part of the scheme, but we are communicating with the banks to see whether the support remains sufficient. Our position remains unchanged. Things are pretty dire still at the moment, and I hope that at the SME level, at individual level, we hope that the banks will be more accommodating when dealing with the hardship. This principal moratorium scheme has been extended 3 times. I'm sure that the customers are facing tremendous pressure. There is a platform for communication, and we can certainly communicate more with the trade and discuss some more about this pre-approved principal payment holiday scheme.
As for the property market, my take is this. Property prices are subject to many factors apart from interest rate, inflation. The demand and supply factor also is at play. But of course, as you mentioned, if the property market becomes volatile, what we can do is that we have the counter-cyclical measure, that is a macro-fiscal policy. We take note of the cyclical changes and make adjustments to, say, for example, the LTV ratio. At the moment, we haven't observed any cyclical changes, but if for various reasons property prices are jacked up very rapidly, we do have responsive measures. And the government, meanwhile, also has other tools at hand, such as other fiscal measures. So these are measures available to us and to the government. Next, Mr. Robert Lee. And for those who pressed the button late after the line had been drawn, I'm afraid that I can't give you the floor because we have a long agenda today. Next, Mr. Robert Lee. Thank you, Chairman. My question is similar to the question asked by Deputy Chair, the Central Money Market Unit, CMU. But I'd like to dig deeper. Now, apart from discussing with the HKMA, the Hong Kong Settlement and Clearing is also a member of the CMU. So, about members of the Hong Kong Exchange, can they make use of the system under Hong Kong Exchange and take part in it? Because I understand that many would like to take part in it, and they are currently using the competitors of CMU, and then I understand different improvement measures, such as the 24-hour service, which is expected to be launched in 2025. And I want to know how you will make it more attractive to participants who are not using CMU at the moment. Howard? We welcome participants in Hong Kong and also securities firms in particular. I understand that many of them are actually CMU members. For the securities firm, it's for them to decide whether to connect to another system. There are implications. At least they need to make sure it's commercially viable and that there is a business case before they would join. So under the Bond Connect scheme and other new initiatives, this is an opportunity for them, and we will extend our publicity to different firms to better understand their needs and how we can cater for their needs. As for other competitors, say the CSD in Europe, we also have communication with them, and after all, we have a very big pie for everyone. So we do hope to attract more business. CE, this is a question for you. In late March, you had media interview with mainland media outlets, and that testing the faster payment system, testing for the faster payment system is underway, and that in the second phase you expand the scope and allowing the exploration of central bank digital currency. So my question is whether you will allow individuals and merchants to take part in the second phase test run, and according to your estimate, how many rounds of testing will be required to implement the use of FPS across the boundary. The second question relates to the Russian-Ukraine war and the implications on, say, currencies, sanctions, energy supply. And I think another point left out is that Ukraine is a major food product provider. And many people are anxious because should the supply come to a stop from Ukraine, many people will be starved. There are food manufacturers in Ukraine providing their products to Asia. Have you gauged the impact on Hong Kong and also for in relation to the supply of processed food? Because I think it's part of the financial system. First, about e-renminbi. Tests are underway. But previously, we set up pilot points in cities and also in Tokyo during the Tokyo Olympic Games. And after a round of testing, we need to implement certain technical improvements. And again, discussions are underway. Very soon, we can take forward the use of digital renminbi in Hong Kong together with its connectivity with faster payment system in Hong Kong. That means the second phase testing can take place in Hong Kong very soon. And I agree with you that we'd like to engage the wider public and more merchants so that we can extend the coverage of our pilot. I'm afraid I don't have a timetable, but it will happen very soon. As for the use of e-renminbi in Hong Kong, that depends on the central bank because in the past few years they have been testing its use in different mainland cities. So that's a decision to be made by the PBOC. About the last point, apart from raw materials, food prices have also gone up quite substantially, especially Ukraine is a major food producer and producer of wheat. This poses an inflationary pressure on many countries. Food prices constitute a major component in calculating inflation. However, as far as Hong Kong is concerned, our major source of food supply is the mainland. So comparing to the European countries and the Western countries, we are less heavily impacted on. I thank the Hong Kong MA for attending our meeting today and for answering a lot of our questions. And I thank the Chief Executive of HKMA for taking a delegation to Europe on a road show. And once again, let me say this. If you need any kind of assistance from chambers of commerce or the business sector, do tell us. And again, please relay this message to the government and see whether we can further relax the quarantine requirements when you return to Hong Kong. We need to step up our efforts and improve the situation. Singapore is our major competitor, and there's been a brain drain of talents because of this competitor and also outflow of capital as well. Once again, thank you very much. Next, briefing on the work of the Financial Services Development Council. Let's invite the administration to come in first. I am not going to go through the attendance list. I'm sure you have it with you. All right, let me welcome officials and representatives to our meeting. Lawrence, Joseph, who would like to go first? Thank you, Chairman, Deputy Chair, members. I understand you have a long agenda today. I'll try to be as brief as possible. We're here to update members on the work of the Financial Services Development Council and the work plan for the next year. As members know, this is the third full year that the Council performed this role as an incorporated entity, and we've been very grateful for members' support, and I'm also grateful for the board for its leadership. So, as a starting point, I'd like to explain that the Financial Services Development Council, or the FSDC, plays a very unique role. As I often explain to outsiders, we are an independent incorporated entity receiving subvention from the government and subject to criticisms. So that we can relay the criticisms and comments to the government and to the relevant regulators. So there are three major fronts as far as our work is concerned. The first one being policy research at different levels, macro or micro. Over the years, we have been compiling the similar number of reports. Last year we published 7 reports, and we also have 2 reports not yet published because of the sensitivity of the issue being explored and the implications of the markets. So we have no alternative but to submit the report to the government as an internal memo. The second front is market promotion. During our initial establishment, we did not do a lot in terms of market promotion, but we have stepped up our efforts. Yet we have been affected by the epidemic, and that has posed difficulty in terms of our travel plans, and we have leveraged on other means of contact such as online meetings and media platforms. I've learned a lot. Well, I won't go through the nitty-gritty, but take the council as an example. In the past year, through different social media platforms, we managed to get new acquaintances up by 10 times. And the other indicator, well, I don't think anyone would use the hit rate as an indicator of our popularity. But anyway, last year we had the hit rate of 400,000. And hit rates from new users in particular. So that's about external promotion. As time goes by, we have been exploring new channels. For example, if you have ever visited our website, you would see that in recent years we have prepared some videos, not about Hong Kong, but about an expatriate and his success stories and his view on Hong Kong. And in fact, in a recent video series, we used Sai Kung as the background. And because of the video production, I learned more about the beauty of Hong Kong. And I think I'll just be brief. In short, you need to have hands-on experience. And we also learned that, for example, we need to have short video clips instead of longer ones to attract more viewings. And the third front is human capital development. So that's about grooming local talent and the training available. And in the past 2 years, we have been collaborating with the FSTB and with funding from the Bureau. We implemented a matching scheme, and it's quite successful. We had a 90% response rate. And we also learned from this experience. And on the basis of this scheme, we then took forward the other scheme for young graduates called Youth. That's built on top of the first scheme. And the scheme is still open for application. And I believe we do have flexibility in receiving applications. That's about grooming local talents.
Looking into the future, I think we have to attract talents from outside. Hong Kong is, after all, an international financial center. I think we have to be multifaceted. This is an international financial center of the mainland. We have the hinterland in the mainland. We do enjoy enormous advantages that are not otherwise available to other places. Because of this advantage, we should not be just a window international financial center. I think we have to serve the role of a bit of a bridge, and we can be an online international financial center like London, and people are coming to Hong Kong not just in one direction. We hope that we should be able to lure talents from all over the world. Thank you. Joseph. Chairman, thank you. Like the Chairman said, the SL government will continue to support the work of the and FSDC and support its future development. I'm sure that under the leadership of the board, the FSDC will use resources flexibly to enhance policy research, market promotion, and human capital development. Over the past 9 years, the FSDC has been working very hard in fulfilling its mission. 52 study reports have been published. A lot of recommendations have been put forward to facilitate the development of Hong Kong. And the research themes will cover new areas to help the different sectors to seize the opportunities. The Hong Kong SL government has been cooperating with the stakeholders to follow up on the recommendations made by the FSDC to support Hong Kong's development. Like, for instance, in order to enhance our attractiveness as the financial center, we provide support for the family offices. We offer tax concessions for the family offices for the GPA development and to integrate with the mainland market. We started the cross-boundary wealth management Connect scheme. We have the Connect scheme for individual investors, and Southbound Bond Connect has also completed the Bond Connect scheme, and is also buttressing Hong Kong's position as an international financial center. And in terms of ESG, the government is reviewing the talents list. We have increased the ESG talent, added this into the list, and we have included this into our future development. And we also have a 3-year training scheme for green finance. We are offering a pilot scheme for the green finance. The government and the trade acknowledged the work of the FSDC in nurturing talents, and the business sector, the media, and the government and FSDC have been taking forward the work in 21-22. The FSDC have organized 70 events and more than 100 exchanges and 12 activities to do with the nurturing of talents. We hope that the FSDC will build on the past 9 years' experience and play the role of taking forward our sustainable development in this area. Thank you, Joseph. 9 members, Dr. Tan Yue-hen, Mr. Wong Pei-lang, Mr. Edmund Wong, Mr. Ambrose Lam, Bill Tang, Robert Lee, Stephen Wong, Nelson Lam. 3 minutes each, please. First, Dr. Tan. Thank you, Chairman. Thank you, FSDC. The pandemic is hitting Hong Kong. The FSDC has done a lot in nurturing of talents. I appreciate that, and the developing green finance, and also the connection with the mainland. They've been doing a brilliant job, but I've got 3 questions here, if I may. First, in terms of research work, has there been any exchanges with think tanks in the mainland or outside Hong Kong, like the PBOC's Financial Institute, and also the Finance Ministry? They also have the think tank, which is doing a brilliant job. To have regular exchanges with them. Also, there are a lot of uncertainties in the international market. In terms of the FSDC's work this year, are you going to do some studies on the initiative to guard against any systemic risks? Third, the FSDC is a consultative body, and people pin very high hope on the FSDC. I remember when the FSDC was first set up, I took part in some discussion. The idea back then was to have the FSDC as the coordinating body for the financial sector. It's been around for about 10 years now. Isn't it time for us to have some discussion on how we can strengthen the FSDC's function? Can you give some consideration in this regard? Thanks very much. Dr. Tan, in the interest of time, I'll address the questions in brief. First, exchanges with the research organizations in the mainland, whether there is any standing mechanism. Over the past year or 2, we have stepped up the liaison with the think tanks and official research organizations in Hong Kong. We take part in our meetings mutually. We have a lot of contacts. We also conducted some joint researches, and this is a new try. And I think both parties should devote some resources, and that would form a very good basis of cooperation, because we take these studies seriously. We also pay attention to the global issues. We look at the macro situation, whether there are any risks, any opportunities, and make adjustments there. Dr. Tan said that we have to pay attention to the risks and the negative side of the equation. Certainly, we will have a look at these. Third, about the expectation on the FSDC and the nature of our organization, certainly there is room now for us to come up with better ideas. But this lies with the government. The work lies with the government. This has gone beyond our remit, and this is not something that I'm appointed to address. Please do not spend all your time on your questions. I'm going to stop the officials if you go beyond your time. Mr. Chen, Chairman, there have been 52 thematic reports. I think there are 4 that have to do with insurance and reinsurance, and also how we can attract insurance or insurers to make investment in Hong Kong. The insurance companies are facing a lot of difficulties because the market is saturated, and they would like to go out of Hong Kong. And one of the areas is the GPA, and the Connect scheme for insurance sector is very, very slow, and you have other Connect schemes for other things. If I may put this to the FSDC. So in terms of the development of the insurance industry in the GBA, are you going to be conducting any thematic study, and how can you assist the insurance sector to break into the GBA for greater development there? Right, thanks very much. We'd like to do a study on this. Other than the 4 main themes, we have a report on the GPA. There is an element on the insurance, touching briefly on the ideas mentioned by Mr. Chen, but they are not sufficiently mature. If you want to help the insurers locally or from overseas to make inroads into the GPA, there are some technical issues and there are some priority issues. Like, should it be life insurance or investment-linked insurance, or should it be general insurance? Or would the general insurance be the be the area to go ahead first before we drive the development in other areas? That we very much like to have some study on this area, because this is a growth area. Mr. Edmund Wong. Chairman, thank you. In 2020, the FSDC talked about group loss relief tax, and this is something that the trade has been proposing for a long time. Whether this is going to materialize would depend on a whole host of factors. I know that you have your respective role. Is there any further room for us to liaise with the FSTB for these proposals to be implemented? This was put forward in 2020, 2 years on, and it is still on the back burner. And this is going to be good for Hong Kong's economic development in neighboring areas. A lot of places are trying to take over Hong Kong's position. Now, for this group relief loss tax, it's something that should be considered. Now, when first was put forward, the 1,500 quota has been filled. Now, this youth, I know that there are 180 people who made the application, and during COVID, we have the problem of brain drain. Now, how can the FSDC lure more talents to Hong Kong, or how can we nurture people who have an intentional outlook?
Lawrence, I'll try to be brief. The first point about group tax loss relief, let me reassure members that at least from the FSDC's perspective, we will follow up on what we have proposed. It will remain on the list, and let me meanwhile give you my take. I remember when we first set up this study, we had reservations because it involves not only the financial market but also corporate matters. However, we are of the view that as long as the issue is relevant to financial services, we will discuss it and we will follow up on it. About FIRST and youth. Youth provides additional quota, so it doesn't affect FIRST, but let me explain. As public money is involved, we do have some limitations. Well, if you've ever been on a flight, you know that airline companies take extra passengers, so there's overbooking, but not in the case of this youth scheme. We cannot receive applications over the prescribed number because public money is involved. And about attracting talents. This is a very broad topic. I do have some preliminary ideas, but well, please be succinct. Right, to attract talents, our board comprises members from, law firms and accounting firms that very much want to attract talents. So the first step is to communicate and find out ways of attracting foreign talents, such as recruiting days, etc. And we understand that would like to attract talents at different levels. If you want to get the top paid experts, then that's another way. And for the middle rank ones, you may need to have more supporting measures. For example, there may be other family members. You may need to arrange for school places. And in fact, I just recently learned that as far as this sector is concerned, well, they have measures to attract the very young graduates. Right after graduation, you attract them to come to Hong Kong and groom them. And that is why we have been placing more emphasis on social media platforms, because we want to extend our efforts and use more innovative means to attract talent. Right, let me remind the FSDC representative to be succinct in your response, because we have limited time. Next, Mr. Ambrose Lam. The UK conducted a study on a BVI, and the report was published on the 29th of April. And it is proposed that within 2 years, the UK may be taking away the autonomous rule originally granted in 1967 to BVIs on the premise of prevalent corruption. And they might step up monitoring in BVIs, and in that sense, the UK will have the right to to take criminal proceeds in the BVI companies. And we also have a lot of companies in Hong Kong incorporated in BVIs for various reasons. So this is a crisis that we see coming, but we also see opportunities. Well, I suggest that Hong Kong can become a tax haven, and the government should formulate policies to attract these BVI companies to come to Hong Kong by, say, offering tax breaks, streamlining the incorporation procedures. These measures would bolster our status as an international financial center. And I would say that this is very much related to national security as well. I remember many years ago, Macau set up a similar regime. Well, I don't know whether in the end it's successful or not, but anyway, we should look into it as quickly as possible because this is a national security issue as well as a development opportunity to us. Thank you, Mr. Lam. This is really a very new issue. Well, I haven't formed, the FSDC hasn't formed any view on the matter. But my take is that we have a lot of listed companies that may not be BVI companies themselves, but there may be subsidiary companies that are incorporated in BVI. And in the long term, immediate to long term, this is an opportunity for Hong Kong. So I thank Mr. Lam for his comment, and I'll bring your view back to people in my network for further discussion. Next, Mr. Bill Tang. I think I am more familiar with MPF as far as financial services are concerned. Now, I understand that the FSDC also raised or make some has also made some comments on the 13 independent NEDs, non-executive directors of the MPF trustees. Let me declare that I'm also a member of the board of MPFA. I want to know whether any improvement has been proposed. The other point is, according to a State Council paper, the mainland would promote development of a private pension funds. Because of the aging population, we have a centralized MPF platform that has gone through rounds of reform to enhance transparency, etc. Is it possible to share our experience with the mainland so that in terms of investment or management, we can develop and look for new opportunities as we bring our experience to the mainland? Who will take the question, please? I'll try to make a start, and I welcome supplement from the Undersecretary or CEO of the FSDC. Let me thank Mr. Tang for his questions and comments. First of all, on the MPFA recommendations, whether they have been implemented. Now, we admit that we didn't make a lot of MPFA recommendations. Maybe Mr. Tang is more familiar. We didn't make a lot of recommendations because in the past few years there have been major changes proposed to the MPF system. So on the specific details, such as how many independent NEDs there should be, I would understand that perhaps these would have to wait until the major reform has taken place. But I'll follow up on your comment anyway. Next, about Hong Kong's experience of setting up a retirement protection regime in the private sector. Again, I haven't formed any mature views on the matter. Of course, we need to expedite our progress. But my understanding is that in the mainland, retirement protection is a highly complex matter and is highly related to people's livelihood. So I'm afraid I can't give you an off-the-cuff answer now. I need to have more communication with market participants. Well, today we've recorded 290 confirmed cases. So for 2 consecutive days, we have recorded fewer than 300 confirmed cases. I understand that this is an issue close to everybody's heart because this hinges on our economy as well. Next, Mr. Robert Lee. Thank you, Chairman. I understand the FSDC's contribution to policy research, market promotion, human capital development, and in the paper, I understand that the Council has provided us with an update of their work and the work plan in the coming year. So about asset and wealth management and connectivity with the mainland and communication with the SMEs. So for cross-boundary wealth management connect, I think it's been on the pipeline for a while. But the problem is how you develop more products and extend the coverage. The other point is connectivity with the mainland. It's all about striking a balance between development and regulation. But the regulation side seems to be having a shortfall, so you should step up communication with the mainland. The other point is in terms of different elements of the financial services industry, such as precious stone and metal dealers, and also other aspects, you should go deeper. Finally, on SMEs, apart from SMEs in the financial services industry, we also have some medium-sized listed companies. So that's about development in the medium to long term and also support for SMEs. Cross-boundary wealth management connect. Yes, we have heard calls for furthering its development. However, there are also obstacles in relation to promotion and account opening, and I'm optimistic as far as its future development is concerned. And about the scheme, according to the authority, they want to take a more conservative approach with a limited range of products. Of course, our perspective is to consider when we should extend the coverage and develop more products. As for the next point, I think I've covered what the FSDC would like to do. And for regulation, I think the matter is left with the regulators concerned. On the third point, about diversity, I totally agree with you, especially in terms of financial products. Hong Kong is an international financial center. Our success has been built on what I call the gateway IFC, but of course we should be more diverse. But I see I have limited time, so I'll move on to the last point: SMEs. SMEs is a core of our financial system. We are successful comparing to other financial centers because we have local financial institutions and we have local talents. So it's all about grooming local talents and building a network. This is a regular effort we need to make and we need to further discuss. Next, Dr. Stephen Wong. Thank you, Chairman. Let me declare I'm a board member of the Financial Services Development Council. I'm also a convener of the Working Group on Human Capital Development. Now, in face of the epidemic, in order to save lives, we have adopted a more stringent and anti-epidemic approach to prevent the importation of cases. This has a significant impact on the financial services industry. Can we do a size up and assess the impact of all these measures on the sector? Well, it's no easy task. Say we need to gauge the outflow of talents. For example, then offices may have been relocated to elsewhere, or they may be deterred from setting up an office in Hong Kong. But we need to take this difficult task in order to conduct a cost-benefit analysis. So that's the first question. Second question, very briefly. I see other G19 members here. Recently, we have been very concerned about the regulators striking a balance between development and regulation. The FSDC is supposed to represent the industry in studying different issues. I want to know whether there is, for example, any study on over-regulation on the part of any regulator, or say how we build an image to attract foreign investors. and that we're putting our investors first. The FSTC is a third party, so it's in a better position to consider these matters.
I meant to defer this to the secretary, but I was told that this is something for the FSTC. The first one is about the review. The way we handle the pandemic and its impact on the financial sector. I think it is better for the FSDC to take on this because sometimes the government or the regulators may not find it convenient to talk about. I think we shouldn't bury our head in the sand. We should look at all the impacts arising from the pandemic. And the second is the balance between the development and the regulation. And this is our raison d'etre. And we have to strike a balance. And I'm not sure I can say that we have struck the balance, but this is one of the areas that we should look at. Under Secretary, that the Vice Chair raised the question that touches on the positioning of the FSDC, like how should we balance the development and the communication with the administration. That we put members who are representative of the financial sector on the board, and they certainly can voice the concerns of the sector, and so they would take advantage of this platform to offer really invaluable advice to the government. Mr. Ronnie Chen, Chairman. I've been following the reports of the FSDCs for a long time. I think this year they devote so much coverage to the nurturing of talents. Maybe this is part of your mandate. Now, for the financial sector and the banking sector, we have the Banking Institute and also the Academy of Finance under the Hong Kong MA. The Hong Kong Banking Institute covers more middle ranking. AOF covers more senior echelon. Do you have any plan to cooperate with these two organizations? Second, looking at your budget this year and last year, the expenditure for nurturing of talents is $600,000, only 2% of the total expenditure. Now, you attach so much importance to the external work. Why is it that for human capital development the budget is kept at such a low level? Lawrence, for the first question, for these two organizations, do we have any cooperation? The answer is yes. Occasionally, in the course of discussion, we understand that we do have different positionings. They are dealing with the training of the talents in the sector. Now, here we are nurturing of talents. Now, I hesitate to use the word training. We are initiating people into the sector. They enter the trade not so much as, not necessarily as bankers. There are so many other positions available to them. So we will be stepping up our efforts in this regard. So we are offering the experience sharing for the senior echelon, so there is a clear division of responsibilities. Now, for the human capital development, I got asked this question internally. Now, my answer to this is that we are limited by the budget. We're not increasing the budget too much each year. So for these 2 years, I would like to do more in the way of external work. I told my colleagues that we would try to secure more benefits for the staff members. In some cases, this may not be internal training, but we will try to offer them better benefits. Well, Mr. Lee, this is in our nature. We certainly would probe the expenditure, whether it's high or low. Undersecretary, I've got some information to share with Mr. Chen. Indeed, the FSDC, in terms of nurturing of talents, they have stepped up their work. Now, we have the FIRST program, or youth version of FIRST. We have commissioned the FSDC to run these programs, and we hope that they will be doing more of the same going forward. And the way this is operated has also been different. At Career Day, they have connected with places outside Hong Kong, and students outside Hong Kong can also get access to the platform. And without a lot of resources, we can expand the coverage. Now, for the human capital development, they have doubled the expenditure. But as a member said, this is taking a smaller portion in the overall scheme of things. The FSDC is very much tasked to do policy research, but they have actually doubled the budget for human capital development. Like the chairman said, for the social media, they have seen a sharp increase. In some cases, they have seen a tenfold increase. And this will help promoting Hong Kong to people even outside Hong Kong. Last question, Professor Nelson Lam. Chairman, thank you. Thanks very much. FSDC, we do maintain communication. We're grateful to the FSDC for their efforts. My question is complex and also simple. The FS said in the budget that the financial sector takes up a large proportion of the GDP in 2020, 23%. And the working population is only 7%. So in this regard, does the FSDC have any ideas to resolve the problem of people making high salaries, but the benefits for them are rather limited? And in many trades, like the financial sector, people are making a lot of money, but they're very limited in scope, and they find it difficult to hire people. Some accountancy firms find it difficult to get people responding to the recruitment ads. Now, you have conducted some studies here, but will you be going into greater detail as to how this can be improved? Right, it can be easy and it can be difficult indeed. And let me try to share with you here. High value added, but they don't derive a lot of benefits. Now, for this high growth sector, now we like to lure more people into this sector so that we get a bigger pie, and this is something that we hope for. To use Mr. Lee's word, I would like to diversify the financial sector. Like for the frontline work, this can be the high value added work, but this can drive the development in the back end, and would like to encourage more graduates to take part, not just in the frontline kind of work, but also at the back end kind of work. and how can we enhance the overall effectiveness. There can be different ways, but at the end of the day, I think if Hong Kong is to continue to be the international financial center, we will generate a variety of opportunities, and we can certainly broaden the scope. The Secretary, thanks very much, Professor Lam, for your question. Let me offer two more perspectives. In terms of development of financial services, we attach a lot of importance to financial inclusion, like the issuance of bonds. We have had the silver bond, I bond, the green bond, which is coming up. So the members of the public who are not in this sector will also benefit from the financial sector. And the development of fintech, the e-wallet, and the virtual bank, and also the consumption voucher scheme, all these developments will make the public feel the development of the financial sector. The training of talents is important. So like we said, we have more initiatives that are undertaken with the help of the FSDC. In the middle part of last year, the Hong Kong MA said that according to overseas studies, the cyber security issue would have a potential risk of 32 billion Hong Kong dollars. Has the FSDC looked into the cyber crimes or cyber security, which is giving rise to more potential risk for Hong Kong? If so, what advice does the Council have for the government to achieve some effect in the shortest possible time? Right, this is a new subject. The FSDC has published a report, Cybersecurity strategy. Yes, we do have some anecdotal evidence, and whether the situation has worsened, that the pandemic has given rise to a lot of different opinions. Whether the situation has worsened or not, we still have to grapple with this issue. Now, this is a new subject, and tonight we have an international seminar on crypto security. And I'm a barrister, as you know. There are more litigations arising from AML and also cryptocurrency, and people lost their cryptocurrency and so on. And the regulators have also published guidelines, and the members of the public are more aware of all these problems. And I'm sure that members probably remember that the Hong Kong MA has issued some guidelines to make people more aware of the problem. There are some animated ads that have been issued, and all these ads will come back to us in the days to come. Every time we have a new innovation, there are risks arising from them, and we do need to have more publicity. Cybersecurity is a growing problem. During the pandemic, people can't see one another face to face, and the risk of cybersecurity is getting worse. So many people would like to see the government or FSDC do something about it to set the public mind at ease. cryptocurrency, people don't have the focused idea what this is all about, and they may have the idea that if they buy them, they're going to be making profits. And I think the government should explain to the public that they should not make themselves vulnerable to the thugs. And this is also part of the state security because it's all about the financial security, cyber security, and so on.
So I thank the three of you for attending our meeting. I think that wraps up this agenda item. Next, legislative proposals to implement a risk-based capital regime for the insurance industry of Hong Kong. So let me invite the Secretary and his team to come in first. We have with us today Mr. Christopher Hui, Secretary for Financial Services and the Treasury, Mr. Aaron Liu, Deputy Secretary, Ms. Noelle Zheng, Principal Assistant Secretary, as well as from the Insurance Authority, the Chief Executive Officer, Mr. Clement Zhang, and Mr. Tony Chan, Assistant Director. So, Secretary, please take us through the item. Thank you, Chairman, members. We're putting forward a legislative proposal to implement a risk-based capital regime for the insurance industry of Hong Kong, that is RBC regime, to align our regime with international standards and strengthen our function as an international risk management center as set out in the National 14th Five-Year Plan. And currently, we have a rule-based capital adequacy regime for insurers in Hong Kong. However, the current regime does not take into account the risk factors pertinent to individual insurers, for example, potential risks associated with the products and investments which the insurers offer and make. One of the key features of the RBC regime is that it provides incentives to insurers to strengthen their risk management culture. Under the new regime, insurers with solid risk management measures as well as better asset and liability management will shoulder lower capital requirements. With these good management measures, insurers will better manage the potential risks associated with the products and investments which the insurers offer and make, thereby instilling stability into the market. On the other hand, insurers exposed to high risks will have to possess more capital to protect policyholders. The International Association of Insurance Supervisors, as the global standard setter for the insurance industry, issued the Insurance Core Principles, which prescribe principles for a risk-based approach for capital adequacy framework. And currently, the mainland, the EU, the UK, and Singapore have already implemented the RBC regimes. And furthermore, the International Monetary Fund, IMF, recommended Hong Kong to implement a risk-based capital regime earlier during its financial sector assessment program. In the past few years, we set up an independent insurance regulatory authority, that is, the Insurance Authority, and joined hands with the insurance industry in preparing for the implementation of an RBC regime. In general, the industry understands the benefits of the new regime and looks forward to its early implementation. We believe time is right for the launch of the RBC regime to keep our insurance regulatory regime in Hong Kong up to date. The RBC regime is underpinned by three major pillars. Pillar 1 relates to capital requirements and quantitative assessment in relation to valuation methods of assets and liabilities for insurers. Pillar 2 relates to corporate governance and risk management of insurers. The relevant requirements took effect on the 1st of January 2020 through the guideline issued by the IA. Pillar 3 relates to the requirement of periodic submission of information to IA and periodic disclosure of information to the public by the insurers. We propose to take forward the legislative work in two phases. First, we plan to introduce a bill into LegCo in the fourth quarter of 2022 this year to provide the legal basis for implementing the Pillar 1 and Pillar 3 requirements under the RBC regime and remove or update certain obsolete provisions and empower the IA to prescribe the relevant detailed requirements by way of subsidiary legislation. After passage of the bill, the IA will formulate the implementation details and related subsidiary legislature in consultation with the industry, targeting completion in 2023. Our target is to implement the RBC regime in the first half of 2024. We welcome comments from members, and we appeal to members to support us. Thank you, Chairman. Thank you, Secretary. All right, the floor is now open. We have Mr. Chan Kin-por, Mr. Chan Pui-leung, Mr. Bill Tang, Dr. Stephen Wong, Deputy Chair, and Mr. Edmund Wong on the list. Any other members? I'll give each member 4 minutes. We start with Mr. Chan Kin-por. Thank you, Chairman. First of all, I thank the Insurance Authority for extensive consultation with the industry in implementing the RBC regime. The IA helps address a number of issues so that the majority of insurers are prepared. Of course, we have small to medium-sized insurers still not yet prepared, and I think the IA is aware of their problems. I hope that you will extend help to these insurers to make sure they comply with the new regime. My first question is this. In relation to the risk-based approach in Hong Kong, are we imposing a harsher requirement on insurers in Hong Kong compared to Singapore and other places? Because after all, this is an international requirement. We have no alternative but to introduce it to Hong Kong. But of course, if our requirements are harsher than others, we'll be driving businesses away. The second point is, there are companies which would like to move faster to the RBC regime than sticking to the current rule-based approach. So the second question is, if it is implemented in 2024, is it possible for some insurers to adopt the RBC regime earlier? I'll take one of the questions and then I'll defer to my colleagues. Now, for the RBC regime to be introduced in Hong Kong, it's on a par with the regimes in other countries. For example, we have the quantitative assessment element, and we also have the other pillar relating to corporate governance and risk management, and that's qualitative in nature. Together with the pillar 3, that is disclosure requirement, we strive to balance and manage operational risk and other risk, because as you know, we have the risk modules and risk factors adopted by other regimes that are different from us. So when we develop our regime, we take a close look at the technical details in other jurisdictions and make necessary adjustments locally. So we draw reference from the international standards, and we also localize our requirements to make sure that we strike a balance between the competitiveness and of our markets and consumers' protection. Well, as Mr. Chan said, we have consulted extensively the industry, and we also need to bear in mind the philosophy behind. So for those with a better asset and risk management tactics, they will shoulder a lower adequacy ratio. So we've drawn up the proposal, having extensively consulted the industry, and having drawn up a system that have regard to the local situation. Clement? Chairman, if I may, I'd like to state our principles. Like the Secretary just explained, in drawing up this regime, we have had regard to the regimes in other jurisdictions. First, we need to provide a stable basis for development of the industry, and meanwhile, we need to ensure stability of the market and hence protecting the consumers' interests. Many members have mentioned the point about the balancing exercise, and indeed this is the case. And Chairman, about the two questions put forward by Mr. Chen, and indeed we have drawn reference to other jurisdictions. But then we have options. First, we have to have regard to the major partner or the market, and that is the mainland market. And the second point, our major competitor. And I suppose members understand that as well. So we take a holistic approach in this balancing exercise. And as set out in the paper, we have completed 3 rounds of quantitative impact studies, or QIS. But in fact, we had 5 rounds instead of 3 rounds. Last year, when we had the last round of QIS, because of the volatile market, we had the 2 more studies on a smaller scale. So we came up with the parameters, and that we made adjustments. And like Mr. Chan Kim-po said, these are proposed amendments from small to medium-sized insurers to provide greatest flexibility to the regime, because in the past 2 years, be it a bond market or debt and equity market, the markets have been volatile, and we believe this regime should be resilient against these market fluctuations. About whether insurers can adopt the regime earlier, and in fact, some insurers have indicated that they'd like to move to the RBC regime earlier. For this reason, and that is, after the many rounds of studies and tests, these insurers are of the view that the RBC regime would give them the necessary footing for them to further expand the market. So they'd like to join the regime even before the official launch. Now, Mr. Chan also asked about the specific insurers. For life insurance, it's easier, but for general insurance, it's more complex, and that depends on whether we have the leeway to do more. Next, Mr. Chan Pui-Leung, I'd like to follow up on 2 points. First, about Pillar 2, corporate governance and risk management in paragraph 6b. According to the GL21, the requirements already took effect, and the insurers have already submitted a self-assessment report on the enterprise risk management framework. I want to know, according to the report submitted, whether any insurer fails to comply with the latest requirement. Now, 21 reports have been submitted, so some insurers have not yet submitted reports. May I know why? The other point is paragraph 22, the legislative timetable. The bill will be introduced into legislature within this year, and subject to passage of the bill, the implementation details and subsidiary legislation will be formulated in 2023. So how long does it take for IA to formulate the details and subsidiary legislation? And before formal implementation, how long will the transitional period be for insurers to adapt to the new regime? About implementation of Pillar 2, I will defer to the IA representative. Thank you, Chairman. Mr. Chan, about the reports we've received, frankly, in terms of the quality, well, I must say that this is the first time the insurers have submitted reports, and it's also new for our colleagues as well. It's a learning process. And yet we do have reference to draw from, and that's in relation to other jurisdictions. Perhaps I can defer to my colleague to give you more details. As you may have noticed, We've provided feedback to the industry after perusing these reports. So based on the observations arising from the reports received last year, we have identified room for improvement, and we've given feedback to the industry. This will be an ongoing process. We'll continue to peruse the report. We understand that the industry will need time to compile reports as well. And to respond to Mr. Chan's question, why aren't all insurers submitting reports? Well, that depends on the circumstances of the insurer in question. For example, the insurers may have suspended their business, and that for example, because of the nature of the insurance business, we may require certain reports to be submitted. My colleague, Mr. Chan, can supplement.
Thanks, Tony. Chairman, thank you. If I may supplement, for the second pillar, last year we received the first self-assessment report, and before we implement the Pillar 1, we hope that this would become a bit of a warming up exercise. The whole spirit of Pillar 2 is for the board to become aware of all the risks and how they can identify and assess the risks, and then come up with all the policy matters to address the risks. As Clement said, this is the first report. They may not be fully clear about certain things when they did the report, and we liaised with the insurers as to what areas that are unclear. As Clement also said, for the important areas like the capital level and also the risk appetite, we last year or last month we had a sharing session with the trade so that they know where they should make improvement. I understand that the Federation of Insurers also will try to enhance the quality there. Mr. Bill Tank. Now for the members of the public, they would be concerned about whether the premium that they pay will become higher, like the car owners, the employers, the property owners, and so on. A lot of people would be affected, and you want to make the insurance industry more healthy. The immediate example that springs to mind is the Target Insurance. And this company no longer takes on taxi insurance coverage. And taxi drivers find it difficult to get coverage, although you have provided new insurer there. It seems to me that the cost borne by the members of the public would be higher. If this system is to be introduced, will the insurers make it more difficult for the policyholders to lodge claims? Now, this is insurance. This is risk-based. There are certain insurers that carry high risk, and certainly people will choose not to patronize a particular insurer if they bear higher risk. And we have a wide variety of insurance coverage, like the automobile insurance, the building insurance, and there are also the annuity schemes, which are gaining traction in Hong Kong. Will there be different impacts on these different insurance coverage in terms of the premium that they pay? Would that be higher? Secretary, right, let me say a few words before my colleague can supplement. Certainly, there will be a differential treatment if the insurers are managing the risk well. Then they won't have they don't have to be subject to more stringent requirement. If they're not running well enough, they would be subject to more stringent requirement. At the end of the day, it would be good for the insured. Target insurance, all along, we have been doing a lot of follow-up work, and the IA certainly would follow up on this. Perhaps the IA can supplement on this. Chairman, for individual companies, there is not a lot that we can divulge. This is a broad subject, but conversely, I'd like to come back to the point that I made earlier. First, I'm sure for the average consumer, this RBC regime will not bring about any negative impact. The levy is regulated under the law, and in terms of the premium, this will not have any negative impact. Second, we hope that the market will be developed in a healthy manner and there will be certainty in the market. And this will be beneficial to the policyholders. Now, it doesn't matter how much they pay in premium, as long as they get a compensation when they need it. I think a reasonable level of premium will offer them the right protection. So, Chairman, like the Secretary said a moment ago, previously we had the rule-based regime, and the capital will be based on the amount of business. Now, it is on a basis of risk. If they can handle the risk well, then the capital will be lower. So the financial burden on the insurers will be lower. In a way, this will not cause any upward pressure on the premium. You cited a very good example. In terms of the regulatory point of view, the sound, robust insurers will have a lower requirement in terms of capital, and they will face less of a burden. Mr. Chen Kim-po made the point that before the law is implemented, many of the insurers would like to embrace this system. This is evidence enough for this system. Dr. Stephen Wong, 2 questions, Chairman. Now, this risk-based capital globally, this is not anything new, and we see that there are some specific questions that arise out of that, and I'd like to put this to the administration. Now, the moral hazard. Now, we are implementing this risk-based approach, and there is the moral hazard that the management might purchase certain apparently low risk asset, but in fact they carry very high risk, and they would have to spend less capital in order to increase their return on equity, and this will make it look as if the performance of the management is good, and this may create some kind of a moral hazard. Now, for AIG, they got into trouble last time. It was a problem of liquidity. As we all know, in this quantitative assessment, it would be very hard to work out, and the liquidity can give rise to a whole host of problems. How do we address all these problems? Secretary, thanks very much. Dr. Wong. Dr. Wong mentioned different investment scenarios. It is precisely because of these that we have to do the stress test and the scenario planning. My colleague can address the details of the question. Chairman, Vice Chairman, I can say that with regard to moral hazard, even under the rule-based adequacy regime, the situation is more pronounced. Now, the solvency margin is on the basis of quantity. There is no sensitivity regarding the products. Now, let's say there are some products that fixed rate long-term products. Under the existing rule-based system, there is no coverage. So there is indeed an element of moral hazard. But in future, for a different tiered system, we do have a different treatment. If they want to take more of a risk, then they have to make provision for more capital. So in the future system, the problem, it would become less of a problem. Whereas given the low interest rate situation, there are some insurance would be incentivized to do that. So we need to have more specific regulation. Like you said, for insurers that have smaller liquidity, will have to have regard to the risk management aspect. So in terms of the quantity and in terms of the exposure, there needs to be some kind of control. In the future system, I'm sure that it's going to be a lot better than what it is now. And 2008, the AIG incident, this is not something a risk-based approach can handle. I think what we need to have is a group framework. If you cast the mind back to the AIG, there was the non-insurance organization that dealt with the credit default swap. That is a very highly leveraged CDS, and that caused the problem. Last year, thanks to LetGo for passing the law, we have the group framework in place, and we are regulating on these groups. We're looking at all the risks arising from the insurance-related or non-insurance-related businesses. That there will not be a repeat of what happened in 2008 for sure. Last speaker, Mr. Edmund Wong. Chairman, thank you. Now, this RBC legislation, I fully understand this, like other amendments to taxation and so on. This is to bring us in line with the international practice. Now, with this legislation, the insurers will face higher requirements. For the policyholders, they will enjoy better protection. But what I'm concerned about is that the insurers will be more conservative in their products, and they will cut back on the dividends. And this may run counter to the preferences of the insured. So will this cause any changes in the range of insurance products and limit the flexibility of the market? Insurance is not just about protection; it is also for asset management. Will that limit the innovativeness of the insurance products as a result? Secretary, and the member raised the question from the market development or competition point of view. Looking at these amendment proposals, we are approaching from the risk point of view. We like to have more robust management of the insurers. As to whether there are any other measures to facilitate the diversified or diverse development of the insurance sector, the IA has been working very hard. We rolled out all these bills. like the reduction of profits tax for the insurance and also insurance-linked securities. Now, all these products have been launched as part of an effort to promote the development of the market. Now, we are approaching these from the risk point of view. Back to Mr. Wong's question about competition and market development, we do have other means to facilitate this. I defer to IA.
Clement. Mr. Wong asked a very valid question, like Mr. Chen Hin-po's question. We conducted quantitative assessments and we have liaised with the industry because we have different insurance products for different sectors of the economy, depending on the nature of the economy. Say for European countries, the economic situation is more stable, and there is therefore a lesser demand for longer-term insurance products. Whereas in Hong Kong, the sort of protection is not as strong as other countries, and there is a need, therefore, to have long-term insurance products. So when it comes to risk module and risk denominator, when we design these matters, we must design the module in such a way not to take away the incentive of insurers in launching long-term products. So we have taken into account the feedback from the industry, and that this will not disincentivize them in the long-term business. And of course, when it comes to dividends, or the interest rate in relation to the insurance products, this affects directly the dividends, but we do have flexibility. Thank you, Clement. According to the paper, the government is prepared to submit a bill into LegCo in the fourth quarter of 2022 in order to implement the risk-based capital regime in the first half of 2024. Any comments on the timetable? No. All right, I thank the administration and Clement and his colleague to our meeting, for coming to our meeting, and we now move on to the next item. Again, we have the Deputy Secretary for Financial Services and the Treasury, and also representatives from the Official Receiver's Office. Oh, not the Secretary. Deputy Secretary, I'm sorry.
應該係財經事務及
It should be Mr. Sam Hui, Deputy Secretary for Financial Services and the Treasury. So Sam, could you help walk us through the paper? Just very briefly. Thank you, Chairman. I'll be as brief as I can. The government attaches great importance to enhancing digitization of public services and streamlining procedures. So the paper provides a proposed legislative amendments put forward in light of improving digitization of public services and streamlining procedures. The proposal relates to three ordinances: the bankruptcy ordinance, the companies winding up and miscellaneous provisions ordinance, and companies ordinance. There are three major proposals. First, we thank the Legislative Council for providing funding approval in 2020 for the implementation of the ESS. For the Official Receiver's Office, the implementation of the ESS is underway, and yet we need to implement legislative amendments so that the bankruptcy ordinance and the Siwampo ordinance would be amended, which would allow users to submit documents electronically. So that's in relation to the first proposal about the electronic submission system, or ESS. Second, regarding the two ordinances applicable to the ORO, there is a requirement for users to make certain public notices that includes gazetto and advertisement in local newspapers. And we are of the view that as we move to the digital era, it may not be the most effective way for notices to be published or advertisements to be published in the media. Instead, we can look up the notices in the Government Gazette, which is the more effective way of giving notice to the persons affected. So we're going to streamline the publication requirements for insolvency notices, and that means the only mandatory requirement would be to publish a notice in the Government Gazette. But of course, if need be, the person in question can also publish an advertisement in the newspaper. The third area relates to the holding of general meetings. Now, in the past 2 years, because of the COVID-19 pandemic, there's been a change in the way a general meeting is held, and at the moment there is no legal backing for a company not to hold a face-to-face meeting. And if a company wants to hold a meeting virtually or hold hybrid meetings, they need to amend the relevant articles of association. Otherwise, they cannot hold meetings electronically in a flexible manner. And we propose to amend the relevant provisions so that, if necessary, a company may hold an annual general meeting in a non-physical manner. So, subject to views from members, we propose to submit the bill into LegCo by the end of 2022. Thank you, Sam. We have Mr. Bill Tang, Professor Nelson Lam, and Mr. Edmund Wong on the list. Are there other members who would like to ask questions? We're supposed to adjourn this meeting at 5:45, so I am going to extend this meeting by 15 minutes. Mr. Bill Tang, 4 minutes. Thank you, Chairman. Just a short one. Of course, we support the proposed legislative amendments. My short question relates to bankruptcy and winding up. And in the event of a self-petition case, well, sometimes the ORO would check. The petitioner may choose either a law firm or an accountancy firm to take up the case. But for workers, they do not have knowledge when the company folds up, and even when the winding up process has started, it's unlikely that the liquidator would explain to workers about the details, whether they'd be eligible for the $8,200 compensation. So, is there any provision to require the temporary liquidator to inform the affected workers of the winding up process?
At the moment, the process is such that the workers would generally go to the Labour Tribunal or to the Labour Department for information and advice when the company is in a difficult state, when their wages are outstanding. And at that stage, there's a lot of advice that will be given by the Commissioner for Labour as to what the entitlements are for the particular employees. Once the liquidation process has started, there will always be the opportunity for any of the creditors or anybody within the process to get information from the liquidators. There's first meetings that will be held where there is sufficient assets, and that is a forum where anybody can attend and ask particular questions. So there is a mechanism in place at the moment, but I do understand that it is quite a difficult time and there is probably a lot of confusion. We also do have quite a lot of information on our website for people who are involved in the process. We've got a lot of frequently asked questions, we've got pamphlets that we give out, and we can also provide information to anybody that makes general inquiries. So in that context, there is information available.
係主
Thank
席
you. 係咪有
Secretary, you'd like to supplement? Yes. Thank you, Member, for the question. Apart from the explanation given by the official receiver, I'd also to supplement that in the case of winding up, the workers would immediately become one of the creditors, and therefore the liquidator is required to explain the situation. Now, Mr. Bill Tang's case may not be directly related to the legislative proposal that we have now, but I'd like to have more details in relation to the liquidators' performance and in the execution of their duty in dealing with summary court winding up cases, and if need be, we can write. For example, about the HMV case, we didn't have adequate information. We had to approach the liquidator ourselves, but that's one of the famous cases, and it's even trickier when dealing with smaller cases. Now, I understand, of course, in the end of the day, even if you apply for the compensation under the PWIF, it takes 7 months on average before a worker gets compensation. I hope the procedure can be expedited. Next, Professor Nelson Lam. Thank you, Chairman. Thank you, Deputy Secretary. On the whole, I support the proposed legislative amendments. We need to digitize the procedures, and especially for the accountancy sector, we have found that it is impossible to submit documents electronically. However, we have statutory deadlines to meet, and we're not able to have access to your office or submit documents in person. You should know that there are statutory deadlines applicable to certain the submission of certain documents. So after you adopt the electronic submission system, is it the case that you will still be serving letters non-electronically? And also, what about the disputes arising from, say, whether an electronic document has been submitted or received? How will the disputes be dealt with? And is it that after this round of implementing ESS, that will be the end of it? No further rounds? Deputy Secretary. Perhaps the official receiver can supplement if necessary, but I'd like to first explain to the honourable member that we are talking about the electronic submission system for the ORO, and apart from the submission of documents, in the system, the document will be stamped. And that is exactly as pointed out by Professor Lam. That is in relation to the submission of documents under BO and SIWAMPO, and these are statutory requirements for a person to submit certain documents within the certain time frame. And in developing the ESS, we have incorporated this element. The second point, now, according to our legislative proposal in the future, a user may submit documents electronically, but this is not the mandatory requirement. A user in the future may still opt for submitting documents in paper form. So basically, we want to facilitate users. And after implementing the ESS, apart from allowing greater efficiency for the ORO to handle documents, it would also bring convenience to the users because they have an electronic platform for them to check the relevant documents in relation to their case and the progress. So users are encouraged to adopt electronic means.
追問
Can I follow up? This is similar to Mr. Tang's question. So, how much shorter the procedure will be, and how much shorter the process will be for the money to become available to them. For the cases like this, it take at least a year and a half or more.
Mr. McKenna.
Thank you, Chairman. The electronic submission system itself should not impact on the time frames within the ordinance for submission of particular documents, but we do hope that it will make our process much more efficient and it will make our administration much more effective. There will also be impact on the workflow of our staff. They will have much easier access to information, and the digitisation of this massive amount of information that's in each particular case, we think will bring efficiency. And so we do hope, yes, that dividends will come out sooner, which is ultimately your question. Thank you.
Okay.
Well, I think smart government digitalization is an irreversible trend. I support the proposed amendments here. And this is the electronic submission system of the ORO, and this is making things convenient for people. In 2020, in July 2020, the Finance Committee has scrutinized the issue. Now, this will not be implemented until the end of 2023. Now, my question is, for this electronic submission system, why is it that we have to wait until the end of 2023 for implementation? Can't this be implemented earlier? We heard recently a lot about Mr. John Lee talking about doing things efficiently, and if you take such a long time, people will have a long time to wait. Can't we make it faster? Chairman, I heard your comments, Chairman. Of course, we very much hope that for projects like this, we can make it up and running as soon as possible. Now, for this ORO project, there are certain difficulties. Right now, they don't have any electronic system, so they are starting from scratch. And this new system, once implemented, will handle all the inquiries, internal workflow, and all the rest of it. So there is a certain complexity with regard to the development of this system. However, we would like to speed up where possible in order to bring this about as soon as possible. All right, we all hope that we can adopt a dual-pronged approach. I think certain processes can be going on simultaneously, and you can expedite the process somehow. I hope you have a look at this. I beg your pardon. Running ahead of you. Edmund, your turn, please. Chairman, thank you. I support this amendment. Now, my question is about 601, the company's ordinance. The secretary and the department said that because of the pandemic, AGMs cannot be held, and they would like to have a virtual and hybrid general meetings. And now they have a physical location, and this is something good. Now, according to the paper, this is subject to the Article of Association of a company, whether this allows all virtual meetings. In Hong Kong, we have 1.4 million companies. The vast majority, 99% of them, are using the model article or the Table A model articles. I'm sure that therein they said that for AGM there must be 2 members or directors present or present by proxy to form a quorum. Until today, we haven't heard anything about the virtual meetings. If we have to be subject to these articles, for these 1.4 million companies, they have to have a physical meeting first before they can move on to virtual meetings. So the whole thing would be very complex. I know the importance of the AOA, but have you considered simplifying the procedures to allow these 1.4 million companies not to have to go through so many procedures to go virtual? Yes. Chairman, for companies registered under the company registry, there are older or companies with older AOA, and there are certain provisions that specify 2 people having meeting at a physical place. But if the AOA is on the basis of the revised companies ordinance, then there is no such specific rigid specification. However, the AOA model probably doesn't have any specifics regarding the holding of general meetings, and they have to have regard to the provisions of the company's ordinance. Now, according to the provisions, it implies that there is a need for a physical place for the meeting. So we are trying to couch the provisions in a way that we don't really need to have a physical place. So as long as the AOA doesn't prohibit the non-physical means for the general meetings, then as a result of the amendment, the companies will benefit from this flexibility. Although there are some old companies that have very rigid AOA, they would make it very rigid that they have to have physical face-to-face meetings. We will be doing publicity, and we will try to urge them to build in the flexibility in AOA for them to proceed. Right, I've got a follow-up question for the new model article. That's after March 2014. Prior to that, it was under cap 32. I'm sure that there are a lot of companies like this. Companies set up before 2014. There are so many companies in this category. And I hope that the government would try to make it more convenient for these companies to go virtual, because this is so disruptive, the way the provisions are couched. According to the paper, by the end of 2022, the legislative provisions will be introduced to the Council. Now, let me put these 2 members. Any comments on this proposal? All agreed? Thank you. Thank you, Sam, and your colleagues for being with us today. Any other business? I don't have any AOB item myself. Any AOB items from the floor? Nope. Meeting is now adjourned. Thank you all very much.